Hello, traders. She told me she was going to scalp, and I was like, when? She's like, when New York open. I said, all right, let's do it. She's like, what? Hello, traders. Hi, Anna DeShields here with Visual Silence Technology. Merry Christmas. We are in December 15th, 2023, and hope you enjoy the background, but for the recording and later on, we'll know that we were at the end of the year of 2023. In this video, traders, I'm going to talk about the fib levels, the Fibonacci levels, and I'll also link to how to draw a fib, but this video is going to talk more about the levels. So, here we are, we're on the 4-hour time frame, and I have a low to high fib drawn already. And what we're going to do is we're going to go ahead and talk about these levels. So they have the 100%. That means that's where you started your fib from. Let me go ahead and pull out my little tools here. This is where I started my fib at, so it says a 100%. And then this says 0 because this is where I stopped drawing my fib. Now, what does that mean? So the fib concept, Fibonacci concept in trading is where we expect the market goes, and then we expect the market to come back down and go back up, come back down and go back up. So the market moving like this, the market moves up, moves down, moves up, moves down, and moves up, and moves down. Or it could go this way. It can go all kinds of ways. Or it can go down and all like this, right? So at each of these intervals, you can measure using the Fibonacci tool. Now, the concept is that when price makes a retracement down to this zone, the 23 or the 38, depends on you, but this is the average range. If price comes up and pulls down to this area, then it's considered a activated fib. You can start using the levels. And then normally what happens is that traders like for the market to pull back into this 61.8 zone. This is a very common zone. It's also called the golden ratio, or is it not the golden ratio? Golden something, but I like to call it the heartbeat zone. I did my own thing, and I call it the heartbeat zone because it's the area that a lot of traders are looking for re-entry, and so I think of it like a live breathing thing, and it's the heartbeat. Because what traders like to do is wait for the market to come back to this area, and then they'll re-enter and take profits up in this zone at the 11.5. Okay, so a way to think about a retracement, like what does that mean? I remember when I first started trading, I was like, okay, retracement, I can look that up, something that's going back, but I wanted more to understand it. So I like to use the example of when it's the new year. Right now we're at the end of December, and it's the new year, and a lot of people make new resolutions. So let's say you're like, okay, I'm going to begin the year, I'm going to start going to the gym, and then that's what you do. And then, here you are, you're going, and it's January, February, and, you come to like a plateau, and then you notice that you start getting a little lazy. Now you're going back to your old ways, okay? And you're like, oh, shoot, you know what? I was doing so good over here, and now, look, I don't want to get up. I don't want to get up. It's hard to beat the habit of your old ways, and you end up going back to your old self. And before you know it, you're like, oh my gosh, you're at the 61.8 zone, and be like, shoot, I'm right back where I was before I started. I need to get my butt in gear and get back into my goals that I want to go to and go back and beyond, right? You want to work out and have these measured goals that you want to see. So that's kind of a different way to understand retracement and the market. The market pulls up, we see it expect to come back to this zone, and then when it comes into this area, the 61.8, some traders like to enter here and then take profit back up into the 11.5. Another area of value in these fib levels is this zone here. The 78, 83, and 88.5. Now this area is, they have several different names for it, but another way to call it is the last line of defense. So what that means, sorry about that, my dog has got something there, I don't know what she's eating. What that means is that the market is buying. That's the current trend. Okay, so from the trend, it's going to break and just pull back a little bit, and then we want it to continue on to 11.5 zone, make a new high, and continue on with the trend. Now, this is Bitcoin, so we expect it to go ahead and do that. Well, if Bitcoin comes down here, retraces all the way back down to this level, what we mean by the last line of defense is that the buyers normally show up in this zone and push the market back up. Push the market back up into continuing on with the trend. It'll park here, it'll stop in this zone, take profits, then you may have a pullback again because it's got to break this high here. Once it breaks the high, it may come back and retest it, but then moves on with the trend. So when the market comes down to this level down here, the last line of defense, that ultimately is a really great area to get in, because normally the market doesn't pull down past this zone as much. So you have less risk of you going to trade against you and more probability of it pushing up. Just like the last line of defense, like in sports, they have like, okay, it's the last area where they need to show up, the opposition team. Well, for the buyers, they need to show up in this zone, or the sellers are going to take control over the trend and start selling it down. And so that's what that area means. Now, like I was showing you with the benefit of if the market does pull down that low and about your risk level, let me show you a tool that we use. Let me get it up here. So if we enter this zone and we want to take profits up around here, the 11.5, well, look at our risk to reward. You might put your stop loss right here. That's a risk to reward 1 to 4. So you're gaining, 4 times what you are risking. So that's a great trade right there. And so that's why some traders go ahead and just wait for a price to get to this location instead of the 11.5. I mean oops. Let me undo that. Instead of waiting for a price to get to the heartbeat zone, which is the 5061.8 zone. They'll say, you know what, I want to see if it pushes past the 5061.8 zone, then I'm going to go ahead and, excuse me, I'm going to go ahead and wait till it goes to the last line of defense and then take my entry there. Take it here and buy up instead of it coming down to this zone. And so that's what these levels mean on the Fibonacci. They represent the different levels where the market can pull back to. All right, well, I hope you found this helpful, and I'll see you traders shortly as we get into more technical analysis, how to mark up your charts. Again, my name is Anna DeShields, and I'll see you in the charts.